Jen Sylvester here with Remax Spectrum, and I am so happy to have a special guest on today, John Harrington from Embrace Mortgage. I've known John for many, many years. He is very well known in the mortgage community, knows his stuff, very smart, and a nice guy. So, John, super glad to have you here. Hope to educate, provide some education, and demystify, and try to educate some people, and let's see, have a nice conversation. Spend some time together. So, how you doing?
Oh, great! After that, I feel really great. Thank you very much. I appreciate that. Yes, I've actually been in the business for over 25 years at this point. Seen a lot of different things. And that was a really good time. As we know, things are busy out there. I just want to mention my license number is 756150. Have to put that out there. And Embraces is also 2184 for a license number, because we'll be talking about some programs and things. So I want to make sure that's out there. But yeah, thank you very much. I'm very happy to come out and kind of probably talk about what's available out there. Things were tightened up a little bit out there after COVID. And as I discussed with you at a nice conference call earlier today, where they're going to loosen things up a little bit. So the timing is perfect to talk about some of the things that are out there. I know we're talking about pre-approvals and maybe some other things to go around the home buying process and even the selling process at this point. But kind of the standard things out there that we take a look at, just to kind of talk about things in general, and then we'll have questions I know you have lined up. But really, what we look at in general right now is kind of what type of property you're looking at, number one, what kind of a purchase price you're looking at, and what kind of a down payment are you looking at. Those are the first general questions I ask folks, just to kind of get an idea what their plan is. But then once I have that information, next step is really kind of application, which allows us to kind of look at credit, which we'll talk about more, I'm sure. Then how they get their income and how we calculate that, what they carry for current debt, plus what the mortgages they're looking for, and then what type of assets they're going to use for the purchase and the mortgage, where those come from, what they have it in, and the different things that we have from there. And that's kind of it in a nutshell in general. Now, go through each particular person's scenario and situations. There's certain different things that we delve into and have questions about, and I have answers for folks for. So, for people are asking in general what we look for in a pre-approval, that's pretty much what we look for generally in a pre-approval. Are those main factors after the application?
So that was going to be my first question. So, like, to get this started, we've got obviously a lot of first-time home buyers. We got a ton of buyers, right? The market is very lopsided right now with the number of buyers versus the number of sellers, and there are quite a few people out there that are looking to buy, that have a home to sell. But there's quite a few there's quite a few first-time home buyers that are looking to get into the market that maybe even couldn't get into the market, earlier this year or last year, during COVID. That's what's kind of catapulting this big surgence of buyers. So if we start at the very top level, right? Somebody's just starting to think about, possibly entertaining the idea of buying a home. They're renting now, and they're seeing that, the cost of the rent is going up, and maybe it makes more sense for them to buy. So at what point in time, I know that I'm always telling people get pre-approved early on, right? But tell me, what does a buyer need? I get a lot of questions about buyers that are concerned about, well, I don't want them to check my credit because a ding on my credit will lower my credit score, and that kind of thing. So walk me through, what do buyers actually need to get that initial pre-approval, and then how long does it last?
Okay, well, that's a very good question, and that's why I went into the general. So if we're talking very specific, I can talk to people in general. Always encourage them to look now. So even if they'll to apply now and get pre-approved now, even if they're thinking, they come to you and say, "Hey, listen, I'm thinking about buying maybe sometime in the fall," but they're not sure where they're going to be. but they're talking to you now, and you say, okay, why don't you talk to John and see what he has to say. I always really kind of encourage people to apply now, just in case there are some things there that will have to be addressed. So if they wait till the fall, and now we're looking at their credit, or we're looking at some of their assets, or some of the things that may need some improvement or some tweaking, shall I say, at that time, they're not going to be ready for the fall. They might have to wait a couple months before they can do something. Now they might have to wait till the spring of the next year. But if they apply now, I take a look now, they might be okay. But if they're not, I can make some suggestions. We do have a program for credit. So if they're a little off in their credit, there may be some suggestions there, maybe paying down some credit, maybe some closing some credit, or maybe even increasing some credit or adding credit that could help them with their credit score to where they could apply and be ready in the fall. But I won't know that until I take a look. So I know you mentioned credit right away, and everybody does. Unfortunately, I really can't come back with good answers for anybody unless I take a review of their information. So I can't really answer any questions on credit unless I take a look at their credit.
So it's a worthwhile ping. Is it true? I read somewhere that an inquiry for purposes of a mortgage are, the credit bureaus weigh that differently than, say, an inquiry for buying a car or an inquiry for buying, getting a credit card. Is it true that it's weighted a little bit differently that way?
It is, and it is weighted. I'm not saying it can affect your credit. But it may be a smaller ding, if at all. But the reason for that is because they know you're not going to go out and get 2 or 3 mortgages in a week. Whereas you can go out buy 2 or 3 cars in a week. You can go out and get credit cards there used to be malls. And that used to be an example, but you can go
in these malls that you speak of. These malls? This is the word I am not familiar with.
But you used to be able to go down the road in the mall and you can get a credit card in every one in one day.
Right.
So they look at those a little differently than they do a mortgage because they know you're not going to go out and get 2 or 3 mortgages in a month. Whereas you could do the other things quite quickly and add up your credit in one day. So they do look at it a little bit differently. Can't guarantee that it wouldn't be a ding. However, you still have to get a good temperature check of where you're at. And it's the only way I can really answer any questions about that is if I'm able to look at that. And it's the first thing I look at. And the reason for that is it answers a lot of questions that I have. So on mortgages, there's I probably have like 8 or 9 different programs that I have available to folks. And credit is the first thing I take a look at to kind of help you guide where I might be able to look at for that program. And they all have different requirements for credit. They all have different requirements for income. They have different requirements for assets. But the first requirement would be credit. So that's kind of why I kind of need that information to be able to kind of lead into coming back to, okay, this is your scenario. This is your plan. This is what I have for a match for what you're looking to do. And this is the best program that you would fit into. And they all have different requirements for those to make that match. But credit certainly is the first one that they would take a look at to help me out to guide to where that program is going to be. Got it.
And then as far as once you get past the credit piece, what do buyers need to collect, to actually do that pre-approval? Because of course a pre-approval is different than a mortgage commitment. Just so for the pre-approval letter, right? So, that portion of it, do they need to send you paperwork? Is it a verbal or, what do you usually require, from the buyer for the pre-approval process?
Okay. Well, actually, I don't require anything. I suggest, because I can't require anything.
Okay.
Okay. So I do require them to fill out an application so I can look at their credit. They'll put on their income, what they think they're making. They put on their assets on that application. So that allows me to look at it. However, what I suggest strongly is that they actually back up that information with, depends on how they're getting their income. So whatever their income source is, I really suggest that they send in some backup documentation for that. So if they're salary employee, I'll look for a pay stub in the W-2 from last year. If they're hourly and they're getting some kind of overtime, I'll usually ask for 2 years worth of their overtime, a pay stub in 2 years worth of W-2s. If they're
Okay.
self-employed, we've got to get into tax returns and things like that. And that's how they generate their income, and that's how they document it. And if they own properties, the same thing. I'll need some tax returns to show how they're actually recording that and submitting that information and that income into the IRS. And we need the tax returns to show that. So everybody has probably a different situation on what I'm looking for documentation. However, I do request it strongly that they send it in. And I'll tell you, it's probably even more so nowadays with the competition out there being a seller's market. A lot of buyers out there, and and I'm sure if you're listening and out there, you're seeing in the news, or on Facebook that these open houses, they're showing rows of cars out there outside, that are looking to look for the same property that you are. So if now what is happening on my end with the listing agents, they're calling me directly and asking me where I am in that process. So if I can say I've done the credit check, they're okay there. I've actually have some documentation for their income. Looks like they're okay there. I usually don't get the asset information up front, but I really ask people up front where that's coming from and what it's there and how long has it been there. Is it going to be a gift? So I kind of get that information verbally. I don't take it because some people are really reluctant on sending those bank statements ahead of time more than they would be a pay stub or W-2s. However, when I get that call from the listing agent, I can have a good conversation and make them feel more comfortable about the offer and where they are in the process.
Right.
So they're looking at just a piece of paper at first, which is okay. I've had offers accepted because they have a pre-approval from me. I kind of to my own home once in a while, but whenever I get that phone call, if I can back that up and say, yes, I've looked at this, and yes, I've been in the business for 25 years, and then this is the program that's going to work for them. It's a better conversation to put you out from the other calls. If they call and they say, oh no, I didn't collect any of that information, and that I'm sure that call's shorter than mine would be.
Yeah, no, and you bring up a great point. I mean, and that would be something that would be important for buyers to know when working with their agents is, the pre-approval's got to have as much information as possible. The more information, especially in this market, such a heavily favored seller's market, where you're going in and chances are it's going to be a multiple offer situation. The more information you can have on that pre-approval letter, the better you'll be presented to the seller. So, if the buyers are talking to, looking at making an offer, that's important that they talk to their agent, and their agent communicate with their lender, right, to make sure that pre-approval is as strong. And as if they checked the hard credit, if they checked it, had an actual W-2 check, if they actually checked bank stubs, to put that in the pre-approval letter, right? Like, because the more information, I know from my perspective, the more information that's on that pre-approval letter, as opposed to 2 or 3 lines saying, yep, they're pre-approved for $400,000, that it's not as strong. So I think that would be that's important that the buyers have a good conversation with their agent or their lender, to get that as strong as possible.
I don't think I'm the only one that actually strongly suggests collecting that information.
Absolutely, yeah, yep. All the good lenders, the good lenders do,
Just for that, yeah. But I know this. I know there's some out there that do not. It's just not how I would want to answer phone calls that come in, especially now. I'm certainly getting more of those calls now than I used to in the past. And to your point, and I know I wanted to mention one of the programs that we offer here, which a lot of places do not, is that Approved to Move, where you can actually take the next step and actually underwrite the file without an address, without having something under agreement. In that case, I would collect all the information. It would really be like going through the process of underwriting with everything, but without an appraisal.
So that's a great, and actually, and I'm sorry for interrupting you, because that's a great segue into my next question, which is, to deal with, and I certainly want to talk to you about what first-time home buyer programs. You kind of mentioned that before we got on the call, that there's some stuff brewing over at Embrace in terms of new programs and so forth. And the scenery's changing, right? It seems like every day is a different day in this market. But talk to me about, as far as sellers that are out competing, with, or excuse me, buyers that have a house to sell or whatnot, that maybe need to have that extra oomph to try to compete with other offers. Talk to me about that a little bit more, as far as, I think having the underwriter already look at it. I mean, that's a huge advantage, to as far as, them competing against other offers, a huge advantage.
It certainly is an advantage, and for those that aren't in the business, really what that is saying that is that instead of having pre-approval, like when I'm looking at their information and saying, okay, I've done this, I've matched them up. Really, after that step, always, usually when you have a property under agreement, then it goes to an underwriter who reviews it again, but they're the ones that actually approve that loan for the bank. I do not. That's why they call it a pre-approval. I'm here to match up, talk to folks, get them prepared. And then once they have that property under agreement, then all that paperwork comes together. Then that second set of eyes for the bank that gives that approval reviews it and says, okay, this does match it. We've looked at everything that's there, and reviewed all the bank statements and the income and checked everything. And they're saying, okay, you're going to get the money at this point in time. That process now can be done before they have a property agreement. So when you present your financing instead of a pre-approval, you're actually presenting a commitment letter. And then when I have that phone call, I can say, no, not only did I review the information, but the bank has already given them approval for the financing. Their financing is in place. Now we just have to take a couple extra steps to close. It used to be that when we started this program maybe a year and a half ago, that the advantage was that we could close quicker. But right now it's actually kind of getting that offer accepted. And that's where that advantage would come in place, I think, now. And also a little bit quicker, but I don't think a lot of people out there are really looking for that time frame at this point. However, some are, because now some folks are selling and buying something else, right, but they have to wait to kind of get the house sold. So it can kind of be an advantage for everybody that's involved on this particular program.
Absolutely.
I love it because it does give you that advantage out there.
Talk to me about sellers that are buyers that are also having a house to sell, right? So there's a lot of, I think that's what's contributed to the bottleneck that we have with the inventory is, people aren't putting their house on the market because they're not either, they're either afraid that they're not going to be able to buy something, or they're unable to find something because, it's what comes first, the chicken or the egg. They're not putting the house on the market because they can't find something to buy, but because they're not putting the house on the market, there's less inventory, and it's a big cycle. So, we're always looking for ways to help people get through that. So are there, or what are the options for, someone that has a house that they need to sell that isn't, that isn't on the market yet, for example? I know back in the day, bridge loans were all the rage, right? So, right. What is going on with the market? Are bridge loans coming back? Do you have any other bridge loan like programs, or, what's available for people in that type of situation?
Yeah, unfortunately, I don't have bridge loans here available to me. I hear rumors that they're out there somewhere. Yes, but I'm not sure where, to be honest with you. Whether they come back or not, I'm not sure. But they always were, it's just a different situation. You have to show that you can afford basically 3 mortgages when you do a bridge loan. So it's a little tricky. You have to have the right particular situation to be able to kind of do that. And when I find that somebody's selling something and buying something else, that they need some of that proceeds from the sale to be able to purchase the next property in some situations.
Right.
in that particular case, if they can do that, without a bridge loan, you could do a home equity, but you have to do the home equity before you can put the house on the market.
Okay.
So you know what I mean? So it's almost like a home, but it's a little different. You're doing the home equity ahead of time. Then you can go out and purchase and look. And then, so it's kind of like a bridge loan, but a little bit different. But you still have to show that you can afford basically the home equity, the current mortgage, and the new mortgage that's
and the
coming.
new mortgage.
Because you'd be doing them all at the same time. Some people can do that. Some people can't. So it all depends on the situation. One of the things I do want to mention, though, is I don't know if a lot of people realize that you can purchase a property and sell your property in the same day.
That's a good point. That's a good point.
Mark out there, I do know when I'm talking to some folks that are in that situation, I let them know that they can do that. They're like, "Oh, I thought I had to sell like certain times." Like, we can do it on the same day. I know when TRID first started coming out, we weren't sure if that was going to be the case, but that has kind of been past. I've done plenty of selling and buying the same day, plenty of times in the last couple of years.
Yeah, and actually you bring up a great point, which kind of lends it to what we were talking about before we started. We got on the line here is we take for granted sometimes with these conversations on what people know and what they don't know, and we use realtor or lender speak, and I actually get that question a lot, and thanks for bringing that up, because you're absolutely right. A lot, I get that question when I'm meeting with a homeowner that wants to move, and they're kind of surprised. They're like, "Oh, I can do it on the same day at the same time." I don't know, they're thinking they have to sell their home, move into temporary housing, then buy. And that's not the case. That's not the case at all. So it's just, it's important to make sure that you have, an experienced lender and an experienced agent that knows the moving parts to be able to manage it, to get everybody on the same page. But no, you're absolutely right. Talk to me about, like first-time homebuyer programs, and I know you had said before we got on the call there are some changes in the industry or changes with Embrace. Like there's different things that were, coming out or talk to me a little bit more about what's going on with that.
Okay, well, the bigger conversation we had this morning in the information and the news and the guidelines is actually the credit scores now are actually going to go back down to a level on some of the programs to a 580 or above.
Wow.
Which we were at before COVID started. COVID came along and they actually went up to, I think we went up to a 640. So now we're actually going back to a 580, and that's on the government programs. I'll let you know what those are if people know what can interpret that. However, it's FHA, VA loans, USDA loans, and we can now actually go to 580. Your conventional loans are going to still be at a 620 or above. That's their guidelines. It's not really an overlay. However, we have really kind of let our overlays go down to a 580 credit score. It's an opportunity for maybe some of the folks that have a little bit of a ding on their credit, but still have the down payment, still have the income to qualify. It's just that the credit was holding them back a little bit. We can actually now go to that credit score. And, throughout the year, I probably do a couple of those, so, I mean, it will open up a few buyers for yourself and an opportunity for somebody out there that probably wanted to buy that had a little ding on their credit, but didn't have that 640 or 620 credit score and I think that was throughout the industry. They had a standard out there for a credit. But we just got news that we're going to actually relax that a little bit. So that's pretty big news on our end. So I was pretty excited about that. And as far as we were talking about maybe folks not realizing some things are out there, some people still think you have to have 20% down to get a mortgage, right? So I mean,
yes.
For probably 20 years. But still surprised that I talked to some realtors that still don't even realize that. But there are programs out there that allow for less than 20% down, and we're getting more and more that are available to us that do that. We still have USDA that still allows for no money down. They have certain restrictions on the USDA program, not for everybody, but it's available. And the VA loans are still no money down option if you're a veteran or active military or Coast Guard, or actually National Guard can be part of that as well. So there's different things that we have available out there. Other than that, we step up from 3% up on programs, depending on what somebody's situation is. So some people, I've still talked to some buyers like, oh, I thought I had to wait for 20%. Nope, we can get you out there. Probably if you're looking all over the state, you're probably looking at needing 3% down or more. But if you're looking at certain areas down here in the South Shore, that we can look at the USDA.
Yeah, and it's I think it's to your point, it's still amazing to me the mindset, and this is almost like our parents' mindset that we need to put this money down to pay down the mortgage, and with rates being the way they are, the impact over the course of 30 years, or even on the impact on your monthly mortgage, more importantly, on your monthly mortgage payment, an extra $5,000 or $10,000 or $15,000 is going to be so, minuscule. It's more important, to keep that, I always tell people, especially first-time homebuyers that are kind of going in, a little bit skinny, right? They're, it's their first venture in, and they want to make sure they have that security blanket. I always say, go conservative on your down payment. Do the 3%, 3.5%, 5%, and put the rest in the bank. Because you move in and yes, you have a home inspection, but sometimes stuff happens, right? Like you move in and the furnace goes on the fritz, or your refrigerator dies, or stuff happens, right? And you need that cushion. So, with the interest rates the way they are, and it looks like they're going to be staying that way for the foreseeable future from everything that I'm reading about it. It's impossible to forecast these days, right? We'll worry about tomorrow.
They kind of wave. They'll go up a little, they'll go down a little, and once in a while we'll see a good size jump. But however, from what we're indications in the industry and what we get from feedback, it seems like they're going to be kind of on the steady for a little while, which is good news. And to your point, I have the same type of conversations when somebody said, well, we want to put another 5 or 10,000 down off of the 3% or the 5% or whatever it might be. And I had that conversation. Well, this is really what it'll impact you on your monthly payment. They're like, that's it? I'm like, yeah, really, that's it. So you might be better off just kind of holding that aside.
Yep.
Might need furniture. You're right. I don't really try to let them know there might be repairs coming, but it's true. Things could happen down the road where they could use that money in hand instead of, for a $15, $20, $30, $40 a month difference. Yep. It's probably better to have $5,000 or $10,000 in the bank right now after you purchase a home for things that might be needed. And
absolutely,
they usually agree with me because they're a little shocked at how little of an impact it has. Because it's if you're borrowing $300,000 and it's over 30 years and your rates somewhere in the threes, it doesn't impact it that much at all. So
no.
I'd like to have those conversations with folks and kind of, let them know my years of experience on what they can or can't do. So I'm trying to think where we're going to leave next. So we were talking about getting approved to move, which is a nice program. First-time home buyer programs. It's really so I guess to answer that, our jobs is to really kind of guide people through this process. And what I like to do is really like to listen to what their plan is first, get the information, and then kind of let them know what that could match up. Like we talked about earlier, matching folks up. So if your plan is put 3% down, try to match you up with that program. A lot of people fit into the 3.5% down because they have so much flexibility, which is the FHA. Most folks fit in that. Then I let them know, well, this is what we kind of need to do because this wasn't fitting in that 3% program, and this wasn't fitting the 5% program. So we want to kind of maybe fit you in over here. But I let them know that's really kind of what I'm here for, is to kind of take your information and kind of match it up for what we have to offer for mortgage programs. And that's what, there's a reason we have probably 8 to 10 different programs, is because not everybody fits into one particular square box.
Yep.
Some people might fit into something a little bit different. And we try to have as many as possible and have some that fit people that maybe a little outside the box. It sounds to me like some of those are coming back too from
Really?
the information I had today. Yeah, we had a pretty good program last year that unfortunately went away. A couple of different programs that went away because of COVID, and everybody's reaction to that unknown. So there wasn't really any investors out there that were looking for those types of programs right away. Sounds to me like we might be having a couple come back. So I won't get any of those right now, but they were certainly ones that were outside the box, which means flexibility and income and things like that. But,
perfect.
Okay, let's see.
Anything else you wanted to any other anything else you wanted to add about that stuff?
Probably
all my questions answered for today. Before we wrap up, I'm trying to think, was there anything else that we were talking about?
Something else that I just wanted to say that we offer here at Embrace is, and then we just brought that back this morning too. So like I said, it's good timing on this, people out there. We have what we call guaranteed on-time closing for most of our products. Not all of them, but for most of them. And what that means, if for some reason, if it's our fault that we don't not close on time, so if it's a reasonable time frame, 30 days or 45 days for the closing, that we would actually refund some of the closing costs back to the borrower.
Wow.
If we do not do it on time, and it's our fault. Not if we don't get certain information from the borrower on time because they didn't send it, but if for some reason we missed something or we didn't do anything correctly, we would actually do that, which I think it's not that we don't do it here. We really do. I've been here now 3 years, and I really have closed on time on things. And as a matter of fact, we had one where it didn't close on time, but it was the seller's problem, not ours. And they checked up on it. They're like, hey, listen, this didn't close on time. And I'm like, well, no, it wasn't our fault. We're fine. We actually did it really quickly. However, we're just stating that, we're putting our money where our mouth is. And we're saying we're going to do things. Here you go. You know what?
Yeah.
If we do it on time and it's our fault, we're going to give you $2,500 back.
Well, I can appreciate that, because the way the market is, and the way that the lenders are reacting, they're trying to juggle the buyer business, they're trying to juggle, the refi business, and it's a business. So a lot of these lenders will say, they'll just yes you. And when I call a lender, or a buyer calls a lender and they say, can you close in 30 days? Oftentimes, and I don't work with those lenders, but those lenders will say yes just to get the business, and then they'll worry about the extension later. And that's the one thing that I always tell buyers, whether you're a first-time home buyer, repeat buyer, move-up buyer, regardless of your experience, work with someone local. Work with someone that's there. I know that you're right in Plymouth, which is I think is an added bonus. Because not that anybody's going to anybody's office now, but there's a level of comfort to have somebody that's not in New Jersey, if there's a problem. But getting a referral is huge, because a lot of these lenders will promise, and then they'll get backlogged because they get pressured from the refi market, the refi end of the business. And they say, well, you know what, we'll just put this on the back burner for just a week, and they can just get an extension. Well, that just doesn't help anybody. So I can appreciate that, from Embrace. And my experience has always been very good with you and with Embrace. So that's awesome.
Yeah,
that is awesome.
Calls, and they're like, well, they say they can't do it. I'm like, well, but now you're looking at 3 weeks. So you're talking
I'm not a magician.
Yeah, we would have fine. Yes, but you're right to their point. And I said, yeah, they just took your business and they'll close you whenever. And I'm not, and being local and luckily enough to do business with you, that reputation is everything I have. So
absolutely.
I tell you yes, and then it's no. That doesn't do anybody any good at all in a transaction. I always felt, and I've been doing this 20 years. It's always been my philosophy is that, I want everybody to be smiling at that closing table. I said, well, sometimes it gets a little rough because that's, just kind of the way it is. However, if we get you sitting down, that's why we're here. If it wasn't sometimes a little rough, then we really wouldn't be here. So
yeah, it's funny you bring that up because I very much, I was talking to someone about this the other day, is that, my philosophy of doing my methodology, my mindset of doing business is very much aligned with the way you folks do business. And that is, the client's needs always come before our own. And our goal, and my goal, and I know this is the same with you folks, but my goal during a transaction is to, yes, get to the finish line, okay, but it's to make an impression and serve them at such a level that they go tell their family and their friends. End of story. However long that takes, whatever we need to do, I want to be able to have someone walk away and be like, wow, you got to work with Jen. And I know you guys do the same thing because, that way, that you've done the best job that you possibly can, and you've served people in the most authentic way possible, in terms of way that they want to be served. And that's the name of the game. And, at the end of the day, because, it's, if you don't have that, then, your business isn't going to, survive, your business isn't going to survive. And that's it's not a self-gratifying way of doing business, right? Like you and I have had plenty of conversations where we're like, wow, those people were so nice. It felt so good to get them in a home and to see, talk to them a month later and they got their furniture and everything else. Like that legitimately feels great. Like that's what I'm looking for. It's not the commission check. It's not the deal, and that's, so I can definitely, I appreciate that, and I just wanted to make that comment about, mindset. So thank you for that. But thank you for taking the time out of your very, very busy day, John. I know you're like going gangbusters over there, very busy guy. And I just want to say thank you, for sharing your very broad spectrum of knowledge and information. And the best way, I'm going to put a card down the bottom with all your information, contact numbers and so forth. But just, the best way for people to get in touch with you, is it text, phone call, or email? What do you prefer for people to get in touch with you?
Everybody has a different way of reaching out nowadays. So I get them all. I get the text, I get the emails, I get the phone. However, I prefer a phone call. That way I can kind of get things started and initial questions. And, in as far as applications go, some people think I give them choices. So these are the choices you could have in an application. Not so much on the first one anymore, meeting in person. That is kind of gone by the wayside, I think. And not that I did too many to begin with. However, I can complete them over the phone. I can send somebody something online, or I can send them something they can print out and send back to me. But it all depends on the person's comfort level. Nowadays, I'm seeing a lot more people just wanting to go online. They can take their time doing it, but at 3:00 in the morning if they need to, or if they have a spouse that works different hours, So, but I send them quickly a link out, let them know some of the things that I'm looking for, ask them a couple of quick questions, and then kind of go from there and have a conversation based upon what kind of feedback I can have for them. But to answer your question, I always like a phone call, but I'm that guy.
You're old fashioned. And actually, you bring up a great point that we didn't even touch on. And I'll just say real quickly, as far as COVID, I still get the question about people, wondering like, how does this even work if in person and so forth. But nowadays, I know in my end of the, end of the business, we were kind of going that way anyways with, remote and, I do Zoom calls and FaceTime and so forth. So you do the same thing. Are you doing Zoom calls or FaceTime with clients, or is it strictly, I don't know what the banking laws are, or you're just doing strictly like email or phone calls at this point?
I'm not doing like Zoom or face-to-face with folks. I guess our end of the business hasn't really changed. Like I said, I've probably over the 20 years, I've probably met 4 or 5 people in person to take an application. So I've always done mostly it's either phone, online, or the form that I can send out that they print out. So it really didn't really change our end of it too much. So I'm still doing, not a lot of the Zoom stuff so, no. It hasn't changed, but it hasn't changed any, so it really hasn't had to change, I guess.
Well, that's good.
But it just doesn't have change. So, but I like to go to closings, as you know, because I get to meet folks at that particular time.
And that's changed. And that's changed. And that's the one thing that I can't wait to go back to after things kind of level out with COVID is actually sitting in the same table, all of us, buyers and sellers, sitting at the same table, handshakes, hugs, congratulatory, best, all that kind of stuff. I'm very much looking forward to having that again, because I know that, I know you like to go to the closing just to, and not a lot of lenders do. Not a lot of lenders, go to the closing. So I appreciate that. But thank you again. I really appreciate it. It's been a nice conversation. I enjoyed the conversation with you, John. And for certain, I'm going to put all your information. So I'm going to put all of John's information down below. And if you have any questions, John will absolutely help you out. If it's just an information about where do I start and what do I need to work on, because I'm not looking to buy for the 12 months, John will definitely help you out. So thanks a lot, John.
All right. Thank you so much, Jen. I appreciate it.